Assalamu alaikum. At first, I would like to thank our honorable course advisor, MD Shahriar Hossain sir, for giving us the opportunity to represent ourselves through this presentation. Today, we will be discussing about an overview of the latest monetary policy declared by Bangladesh Bank. So, what is monetary policy? Monetary policy is the process by which a central bank like Bangladesh Bank manages the money supply, interest rates, and financial conditions to achieve economic goals such as controlling inflation, stabilizing the currency, promoting economic growth, and reducing unemployment. Today, we will be discussing about four questions. The questions are: provide a summary of the monetary policy, mention significant changes compared to the last policy, what are the tools used by Bangladesh Bank, and the last one is suggest the reforms needed from your understanding. Okay, moving forward to the next slide, we can see the date of announcement and effectiveness. The latest monetary policy of Bangladesh Bank, announced on October 22, 2024, focuses on combating high inflation, and it is not currently uploaded in the Bangladesh Bank website. Okay, so now we can see that the from the October 22 2024 monetary policy, there is an increase in the policy rate. The central bank raised the key policy rate by 50 basis point to 10%. This is the fourth hike this year and the 11th since May 2022. Okay, and the next one is inflation control. The primary goal of the rate is to of this rate hike is to tame inflation, which has been a persistent issue. The higher borrowing costs are intended to reduce spending and slow down inflation. Okay, the third one is economic stability. These measures are part of broader efforts to stabilize the economy amidst rising global energy and commodity prices. This policy aims to balance economic growth with price stability, ensuring that inflation does not erode purchasing power and economic stability. The fourth one is foreign exchange policy. Another critical aspect of the policy is stabilizing the exchange rate, which has come under pressure due to high demand for US dollars. The central bank has intervened by selling foreign exchange reserves to prevent excessive depreciation of the Bangladeshi taka. And the last one is liquidity control measures. Bangladesh Bank has reduced the frequency of repo auctions to just one day per week from the earlier multiple weekly sessions. This measure seeks to limit liquidity injunction in the banking system, making it more difficult for banks to access cheap funds. Okay, so moving forward to the next question, that is significant changes compared with the previous policy. We can see there are changes in the policy rate. The previous policy rate was 9.5 and the current policy rate is 10%, making a 50 basis point hike. Next one is inflation target. In the previous policy, we can say that we can see that the inflation target was 6.5. In the current policy, the inflation target remains at 6.5%, but the central bank has emphasized stricter measure to achieve this target due to rising global prices. The third one is reserve requirements. We can see that the cash reserve ratio was 4% in the previous policy. Now it is 4.5%, and we can see in the credit growth that there is a 14.8% credit growth in the previous policy, and in the current policy the target has been revised down to 13.5 to curb excessive borrowing and spending. Okay, in the next option we can say we can see that the tools that is used by Bangladesh Bank employs several tools to implement its monetary policy, aiming to control inflation, managing liquidity, and ensure economic stability. Here are the main tools and their main tools of monetary policy, that is policy rates, open market operations, reserve requirements, discount rate, and moral suasion. So coming to the policy rates, there is two types of policies. There is repo rate, the rate at which commercial banks borrow money from the central bank. As of the latest policy, the repo rate is set at 10%, and the reserve repo rate, we can say that the rate at which the central bank borrows money from commercial banks, the rate is typically lower than the repo rate to encourage banks to lend more. In the open market operations, we can say that there are two types of open market operations that Bangladesh Bank does. One is by providing treasury bills and bonds, Bangladesh Bank buys and sells government securities to regulate the money supply. For instance, the central bank might sell treasury bills to absorb excess liquidity from the market. In the Bangladesh Bank bills, in the short, we can say that BB bills, short-term bills of 7 day, 14 days, or and 13 days bills issued by Bangladesh Bank to manage short-term liquidity. In the reserve requirement, we have talked in the previous slide that the reserve in the cash reserve ratio of Bangladesh Bank is now set at 4.5%, and the in the statutory liquidity ratio in SLR, the percentage of a bank's net demand and time liabilities that must be maintained in the form of liquid assets. The ratio helps ensure banks have enough liquidity to meet their obligations. In the discount rate, we can say that the interest rate at which commercial banks can borrow money from the central bank using securities that have been approved. The rate affects how much it costs to borrow and lend money in the economy. Okay, so in the next slide, we can see that the reforms needed in the monetary policy. The reforms are interest rate transparency. My recommendation is enhanced communication and communication and clarity about interest rate changes, repo rate, SDF, and SLF rate, because increased transparency can enhance the transmission of policies and lessen market uncertainty. Then the transition to market-based exchange rate. My recommendation is shift more quickly to a fully flexible exchange rate system, minimizing direct interventions, because a market-driven rate would stabilize the taka naturally and attract more foreign investment. The third one is enhancement of NPL management. My recommendation is improve non-performing loan NPL regulations by establishing more precise asset and review and recovery protocols, because the soundness of banks and availability of loans for beneficial purposes would both be enhanced by lower NPL ratios. And the last one is enhanced open market operation. My recommendation is diversify open market operation instruments with options for long-term and overnight liquidity support, because a more flexible OMO approach would strengthen the liquidity control and stabilize the money market. Okay, in the last, at the last, we can say that a comprehensive strategy to managing the economy in the face of both internal and international difficulties is reflected in Bangladesh Bank's most recent monetary policy announcement. By emphasizing economic development, inflation management, regarding economic stability, the policy seeks to establish a favorable in the interest of sustainable development. However, ongoing changes and flexible actions are required to handle changing economic circumstances and guarantee that monetary policy is effective. Thank you everyone. Assalamu alaikum.